All right, so I wanted to touch base on the price delivery that ICT has. Um, this is a pretty much how price moves throughout the day, and it all starts with consolidation. So for lesson two, I wanted to dive a little more deeper into how the market moves and how I utilize this to find these setups in the market. So let's go to the charts real quick. We're going to start with Monday. Um, and then once you gain more familiar with the software trading view, um, obviously you're going to have to learn and you have to have the right settings and also have the correct symbol up here and things like that. So that's something that you have to look into and on your downtime and just navigate the platform itself. Um, that way you can get familiar with the functions and things like that. So starting off with Monday. So we don't trade Sundays a whole lot just because there's no point for it to trade it. Sometimes you're just relaxing, you don't want to do your thing, things like that. But the first thing that I like to do, I like to be on the 5 minute time frame to draw out my trend lines. And then I drop down to the 1 minute to refine my entries. So we'll start off with a simple trend line. Immediately you can see how price is starting to move upwards. So I'm going to draw a trend line from this high all the way to, well, before this price action even formed, we'll use this here because usually I don't draw out my trend line. So after 8:39, okay, something like that. Yeah, make this white real quick. Okay, that is the first thing that I do. Second is I take one of these rectangles and I make note of the high and the low that formed in London. So this is what I call the London range. Where is it at? Oh, there it is. Perfect. So I look for these confirmations to give me more clarity of the direction of the market. Just because this high is taken doesn't mean that price is always going to sell off and take out the low that formed in London. It's happened before. I've seen it, but it gives me an idea of where price could potentially go. So, obviously here price. This is the high of London, and then we have the low of London. So price did indeed take out the high in New York. So these boxes, they signify the sessions. So this is your Asian, London, and then this is your New York. They signify the different sessions. So in New York, price took out the high. Immediately, we already have an idea that price could potentially go down. So after 9:30 a.m., the opening bell, we wait. We don't want to trade before 9:30. We wait for 9:30 for price to do what it needs to do, manipulation, so on, and things like that. Okay, so using this price delivery from ICT, we're going to identify the stage of the market. Where is the market doing in here? It seems like it's on a larger time frame. It seems like an expansion move. So obviously, after an expansion, here you see how prices expanded, and then finally reverses over here. Well, this is on Tuesdays, so we're gonna focus only on Monday, but I'm just kind of giving you an idea of what price looks like. So here we notice a form of somewhat of expansion move. If we drop down to the 1 minute, so let me place a line. There you go. That way I don't lose track where I'm at. So we'll drop down to a 1 minute here in a few minutes. Let me just make note of the macro. This is the macro that I trade, the 950, 1010. So remember that we have to trade within the macros. If not, it doesn't make any sense. $10.50, 11.10. Let's go to the 1 minute. Okay, almost there. All right, we finally made it. All right, so here, here within the macro, I don't like too much how this looks, but if we look at this side of the price action, we can see that the price been kind of like expanding up higher. So it's been a lot of expansion move throughout the London session in the early AM New York session. So anticipating, the first thing we want to anticipate is, okay, what is next after an expansion? We go into a retracement or a reversal. Okay, so first thing to note, because we're not going to trade before 9:30, is to note that we have an expansion move here. The expansion. Okay, how about we do this right here? That way, this is the expansion move. Right over here, we have the consolidation. So after consolidation, there's always an expansion move. So this obviously uses your consolidation. So consolidation is when price remains stuck in a tight range and it finally breaks out. So you can see this breakout, breaking those highs. So now it forms the expansion. Just keeps on going high until it reaches a certain point of liquidity. So the next move obviously is the retracement or reversal. So remember when I said in lesson 1 that the way you distinguish between a reversal and a retracement is if price reaches like the 50% of that expansion, then that is a retracement. But if it goes past the 50, then I would classify that as a reversal. Okay, so we had a nice retracement here. So this is a retracement. Go here, retracement. And then after a retracement, we go back into consolidation. So not always will consolidations be this large in like time wise. So sometimes we have like small consolidations and then finally breaks out. So this, after this retracement, will be the consolidation. So you can see how here in the 950 1010 macro, it did provide you with a small little setup, but it was not enough, right? You could have easily been stopped out if you didn't take profits immediately. This could have been a missed move, a missed opportunity, but does not mean that you would have been profitable here, because yeah, you've seen this retracement. Okay, you wait for the next stage that offers a better opportunity. So in this consolidation, price already broke out. You could have already entered here, even though it's not in the macro, it's like in between two macros. So this is also an opportunity to go in a trade. You just have to be able to identify these stages, because after an expansion, you go into retracement or reversal. You could also, let's see, I've never done this part here, but to measure, let's see, I'm going to measure the high. We'll use the low and the high of that expansion move. You see how price tapped into the 0.5, that is the midpoint. So if price would have, obviously it did peak below it, so that could have been a little bit tricky there, but price remained still above the 50% of this expansion move. And then after the 50%, we've seen that consolidation form and then a nice bounce off that. So this is the expansion that formed instead of a deep reversal. So this is the expansion move again. And then we can make note of it. We can also take the fibs, take this low and this high, and measure that. So let's do that with this. Take this high and then this low. We're going to stretch this out a little bit more. Okay. And now you can see, so, and what do you anticipate after an expansion? A retracement or reversal. So is this opportunity being offered 1050, 1110? Is there an opportunity being offered within the macros or a little bit after the macros? Yes. So easily you can enter here on this expansion move, also profit here. Boom, that's a nice little profit. Or you could have waited for the retracement or reversal. So you just have to figure out what is your entry style. So are you the type of trader that likes to go in the retracements or the reversals? The thing about these retracement and reversals is that a retracement can sometimes get you if you don't know how to distinguish the reversal or the retracement, because retracements are very short-lived, and then they bounce back. So yeah, you have to be really, really careful with entering in those. But if you enter in a nice deep reversal, that is just amazing. Look at this huge move here. That's a big move. I mean, I'm not saying that this is a huge reversal. Let's see. Because it also seems like there's some consolidation here. So this could have been the reversal move here. From there. and then it did cross below the 50%. So yes, it is a reversal. And after the reversal, we go into consolidation and so on and so on. So this was a beautiful trade. Now let me make note of that. Reversal. There you go. Yeah, so I truly believe that, at least for me, I prefer to enter in the expansion moves. They're just, so after consolidation is the most sure move, the low hanging fruit. So after the consolidation, just wait for a breakout. Boom, breaks out. Enter. Once you see like a rejection of that high, like these wicks are confirmations. That's something that you can also study. It's more of a advanced study. But if we go into this trade, you can see how there's a separation from this candle to this candle into this candle. There's a separation here. And this is what you call a fair value gap. So none of this stuff is secret. It's available on YouTube. Like if you go to ICT, this guy, he has all of the content you need to become profitable. And there's a lot of information. I mean, talking about like just alone, this is his private mentorship from 2016 all the way to 2026. So the core content is a good starting point. There's 14 videos and then goes into more content over here. It's about 8 videos, and these videos, they can be hours long. They can be an hour, 2 hours, 30 minutes, some of them, and you got 41 here, 105 videos. I mean, there's a lot of content, a lot of work that he has put out. And then here in this private mentorship, he also goes a little more deeper into the price delivery, which is, I highly recommend this one because this is how I trade it. So back to the charts, separation of these candles forms a fair value gap. That is one of his PD arrays, or what he calls it in a inefficiency. If it forms like a gap like this and price does not return back into it or to the 50% or even touch the upper quadrant of that fair value gap, then that means that price is extremely bullish. Like it's meaning it's strong. It's there's enough strength in this move here. So obviously you would enter. I mean, I would enter here with my stop just a little bit above the low of this consolidation, and then just run it. I mean, why not just see where it goes on this expansion? I'm already anticipating a reversal or a retracement. So as soon as I see price being rejecting, for example, draw this trend line. Once I see price break through this trend line or take out some of these lows up here that form, that is my exit signal. You see how it broke through this trend line and it broke that low, and this is my confirmation to get 1, 2, 3. That is your signal to exit, or you can also exit on the second attempt to try to break higher, but it got rejected. So you have to look at these clues out there. So this is your exit signal. Whoa. That's your exit signal. And you don't want to hold your profits for too long on an expansion move. I mean, it could expand higher and higher, but I wouldn't hold it. I wouldn't be too greedy. You just have to look at these signals. That's why you have these fair value gaps that form to give you confirmations if price wants to continue higher. So you can see how price here retraced. It did tap into a very small fair value gap. It shows some weakness because it still was able to cross below it. Right here, it did show some strength on this fair value gap. So you can see how the bodies of this candle. Let me zoom in real quick. This is like advanced level lessons, and you can really get too deep into these lessons, but I don't want to make this video too long. So you can see how you take that wick from that candle, it's low, and then this candle's high. This is a wick. You can see how the separation, and then you have this line. I use it as my midpoint. That's the 50%, because what I'm looking for is for the bodies of the candles to respect that wick. I'm okay with the wicks coming through, it's fine. But if the bodies open below, that's a sign of weakness. So we already have this gap here. This is not just only a fair value gap, but it's a breakaway gap because price did not come down to the midpoint to test it. This is showing you a sign of strength in this trade here. So price rallied, formed and I'll be honest with you, I'm not really good with order blocks, identifying the order blocks. That's another PD array of ICTs, but I'm assuming this is also a form of order block. I'm still not very good at identifying those, but there's no need to know all of this. But if you're able to identify the stages or these simple patterns, this is a good starting point. But this right here is all this information is more advanced. It'll be useful in the future, but for right now, just focusing on identifying the stages of price. So again, this could be an order block. I'm not too sure, but I like what I see. In over time with experience and just being able to read price, the more time you spend on the charts, you should be able to read price easily. Like you see how these candles respected it. I'm looking for that, and this is a potential another entry point here with your stop loss below this candle's wick, or you can have it just a little bit further out. You just have to manage your risk accordingly. And then price rallied, and we had a nice little retracement. Again, here's a pretty small imbalance. The bodies did peak a little bit below it, but if this is an order block, then price respected that order block. Or if we even zoom into the 15-minute, there could be a fair value gap where price rejected off. So you have to check the 1 minute and also the 15-second time frame. That's something, again, it's going to take time, but if you're able to identify just the stages, that's all that matters. I'm just taking you into the advanced trading. And again, price broke out, bounced off that level, formed a nice breakaway gap here, showing you continuous strength to the upside, and then another fair value gap here, respect of the midpoint, showing you continuous strength, another fair value gap here. So whenever you start to see all these PD arrays being respected, that means that you are on the right side of the market, that the order flow is perfect. Okay, and then this is your sign to exit. Boom, you're out. Now, there's also, let's see, what in the world? Why did the charts turn pink, bro? I don't know what happened. Okay, I have to refresh this. I don't know why they turned pink. Um, I don't recommend it. I don't want to confuse you all with all these indicators. But these indicators are also like another form of confirmations to, um, if you're starting off, I think the first one I would probably focus on is just this one in the VWAP, just because this one is like a indicator that lets you know of potential reversals. But I would not even worry about the indicators. It's just they're lagging, and they're not pretty accurate. There's somewhat have some use to it, but the first thing that you want to focus on is just price itself. That's the only thing that you get to worry about. So after the expansion move, I've shown you what to look for to let you know that you're on the right side of the market, that you're riding with the trend. After that expansion move is your retracement or reversal. Obviously, it did peak, not peak, but it did cross the 0.5 of that expansion move. So it did confirm the, it did confirm what is called the reversal instead of a retracement. And what happens after reversal? Back into consolidation. So right here, this is the form of consolidation. And this is the Asian session. This is a session that honestly anyone can trade after, if I say for the guys that have a job, this is the best session to trade in Asia, just because it's in the evening. So from 6 p.m. to like 10 p.m. you can trade, and you can make a decent profits. So here is a consolidation. Prices did kind of peak a little bit, but did not confirm that it was going to go to the upside just yet. So after the consolidation, obviously, is expansion. You can see here clearly a beautiful expansion move. Rallied. It's an expansion move. Whenever you see large candles like this, like breaking out, those are like confirmations that it's leading into an expansion move. Over time, you will be able to identify this. So you just have to put in the work, and just simply dedicate time to be able to read the price. You can see how on this breakout, we have a nice breakaway gap here, showing you strength of price action going up. Another fair value gap that opened here, price retraced. And if I take the Fibonacci tool, extend it out, place it there. So price is showing a lot of strength still to continue to the upside. Why? Because it did not even want to touch the 0.5 of the midpoint. But if price would have even touched the midpoint, obviously it would have bounced if we open above it. But if it doesn't come even close to it, that's showing you strength in that trade, in that trend. So this is your expansion move, keeps on going up, 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 up. And what happens after expansion? We go into a retracement or reversal. So I would say that all of this move here is an expansion move. It's an expansion move. Okay, 1 second. For 1 second. Okay, I had to pause the video for a few minutes. All right, so after the expansion, um, we go into what is a retracement or reversal. Now, this is a pretty, I would say, a very difficult session because this move here is, is very manipulative. But if, again, we're trading the macros, this is already in the next day, the next session, but this is a manipulation move, very manipulative, and also very tricky. But if we wait, that's why it's important to wait to trade in the macros. So we take the 950, 1010. That is one of the macros. So all throughout one of the ICT's teachings is macros. So you want to trade within the macros, or not just only trade. You can trade a little bit outside of the macro time, but look for a potential setup in these clues to identify the best setup, also the stage of the market and things like that. So we already know that the market expanded a lot throughout Asia, London, and then leading into early New York. So we know that price is going to reverse real deep. Look at this huge move, beautiful move. This is a humongous move here. It's just insane. This is like highly profitable move. Like I entered here, but I didn't capture the full move. I unfortunately did not hold it all the way through, but I was able to enter here, and then I exited like somewhere along here, and then look at how much I missed out. But it's all good, that's part of not being too greedy. And if it was not for me to make all of this profit, then it's not for me. I'm not going to be too worried. But you can see how if we take the fib levels again, and if we measure the high of that expansion in that low, price open below the midpoint. What happens? Price open below the midpoint, boom, and then it rallied down. I mean, not rally, but a dump to the downside. So that confirms that if price would have rejected the midpoint, then we would continue up. But price instead broke through that midpoint aggressively. Boom. That would have been another entry point. Then we have more macros. We have the 1050, 1110. We have the 110, 140, and then the last macros is 315, 345. So within any of those window of opportunities, you could have made some decent profits. You just have to figure out which type of trader you are, which style do you like. Do you like the reversals? Do you have the retracements, the expansions? Never in the consolidations. I would never enter in the consolidation just because you're going to get stopped out. Just wait for the signal, price breaking out or breaking to the downside. When I say breaking out, it can be up or down. So if it breaks out to the downside, then I will look for confirmations that price wants to move down. And if it breaks out to the upside, I'll look for confirmations that price wants to go up. So once you work on identifying consolidation. And then from consolidation, you know that it's always going to be expansion. Consolidation, expansion, And after expansion, it can be a retracement or it can be reversal. It will never go from reversal back to retracement, and it will never do that. So after reversal, we go back into consolidation, and just a cycle. And that's how the market repeats, bro. That's how you do it. That's how I can put it in the most simplest terms. But that's it for lesson 2. I don't want to spend too much time on this video, so that's it for today. But the first thing you got to do for real is open an account with TradingView. Get familiar with the software, the platform. I have, let's see. These are old ideas. I wouldn't even look at that. That's whenever I first started trading. Dang, these ideas are from like back in the days, 2019, 2018, 2018, bro. I was looking at these head and shoulder patterns. My gosh. But it's good. I'm not even going to delete all this. I like to see this and see how much I've grown and developed. But anyways, go into your TradingView. I have the premium. I believe it's like $60 a month. I can't remember how much. I don't know. But yeah, you don't just go with the essential one or the middle plan, and get familiar with the app. You can download this on your phone. I also trade off my phone. And then you can also just use the browser to open it on your laptop or your computer. But here on the right side, you have all these tools. I mainly just use the trend lines, the lines. You can select that and then extend it out, just move it around. And then you have horizontal arrays, lines, vertical lines. I use the vertical lines a lot. What else? Oh, the shapes. I use a lot of the rectangles, circles, and then also the path to kind of draw out a analysis. Circles, things like that. And then also you have your Fibonacci tool, Fib retracement. You can also customize the colors, the backgrounds. This is my preferred colors. Green and black, just kind of like what ICT has in his charts, just because I've learned from him. And what else? That's pretty much it. Just get familiar with the TradingView app, download it. Again, don't worry about the indicators. You don't need the indicators. And then this blue line that you see here, that's the VWAP. That could also be useful in the future, but not really. All that really matters is identifying the stages of the market, and that's pretty much it. All right, well, that's it for lesson 2. Lesson 3, I had to figure out what I'm going to do in that lesson, but I'm sure it will be good. Okay, that's it.